Bloomberg News.
For more on China and just what investable angles there are to this news from the nation's capital today, let's turn to someone who is very familiar with the country and its markets, legendary investor Jim Rodgers. He's chairman of Rodgers Holdings. He joins us now from Singapore. Jim, you were an early investor. You were in the Chinese markets before it was popular to do so, before we led 10 a.m. programs with exactly what was happening in the Chinese marketplace. When you see what's happening and you hear what's happening in Washington, D.C. today and talk of just how China and the U.S. can improve their relationship and speculation about how China might start to spend its foreign reserves, what do you do with that information? I mean, what are your thoughts about just how China might start spending some of its own reserves?
Well, first, I'm astonished you remember, because I first invested in China in 1988. Yeah. You weren't even born in 1988, were you? You couldn't read. Anyway.
We've been watching you for a while, Jim.
The Chinese have built up huge reserves for a rainy day. As you know, they're the largest creditor nation in the world right now, and now they're starting to spend those reserves for a rainy day. But they're mainly spending them internally, which anybody would do, and they seem to be spending them on strategically important things. Mainly infrastructure, for instance. They're rebuilding Sichuan province, they're rebuilding the railroad system, they're doing things which are going to make them more competitive coming out of this, if the world ever comes out of all this, which is a very, very wise thing to do. I contrast it with what's happening in America, where Mr. Obama and Mr. Bush were just spending all this stuff on make-work projects, which are not going to do much good in the long term. So well, China's doing a very good thing, from what we can gather.
Apart from how the state is spending its own stimulus dollars, when you look at what's happening in the Chinese markets, last week we saw that record IPO in Shanghai of China's state construction. There's talk of more Chinese IPOs in the pipeline. When you hear that, there's speculation that there may be an asset bubble when it comes to the Chinese marketplace. Do you agree with the assessment that there's an asset bubble underway, or are you seeing buying opportunities right now?
Well, I'm not buying any stocks in China. I bought stocks. I've never sold a Chinese share since 1988, but I bought my last shares in October and November of 2008. I haven't bought anything since. The market has more than doubled in the last 9 months, Margaret. I don't like to jump onto a moving train or something like that. Not at all. I much prefer to buy when things collapse. I'm sure there are going to be more collapses somewhere along the line in China. They're just, you know, we got another 10, 15, 20, 30 years. Who knows how long. Then I will buy more during a collapse. You also find that real estate has boomed here in the last 2 or 3 months. In China, it's almost back to where it was before during the last real estate bubble.
Jim,
so
I want to get back to you on real estate and just what you are finding to buy right now. We've got to go to break. Stick with us. We're back with Jim Rodgers, chairman of Rodgers Holdings. We've been talking about investing in China. Jim was an early investor in China, and he just said before we headed to break that he would stay away from Chinese equities right now. Jim, in your estimation, there is an asset bubble in the equity markets in China right now? Is that what you were saying?
No, I didn't say that. I didn't say that, Mara. I said I would not be buying right now. I'm certainly not selling. I just said that the market has doubled in 9 months, and that's usually a worrisome sign. But it went down something like 70 or 80% in the year before that. Real estate has skyrocketed again in many of the major cities, such as Shanghai and Beijing. If you want to play China today, the way I would play it is to buy commodities. I mean, I've said this many times, commodities. China has to buy commodities. They have no choice. They cannot cheat you. They will pay you on time. They will take you to dinner. They will do everything because they have to buy commodities.
Well, and there has been a lot of press about the Chinese government and their dealings with commodity producing companies, Rio Tinto among them, the demand for iron ore, the demand for construction materials being quite strong in China. But apart from sort of those hard assets, I mean, do you play the grains? Do you play more of the edible commodities as well?
Well, I own them all, and I would buy them all, especially the grains. We are told, and I have no way of knowing, we're told that the Chinese are spending more and more of their dollars, U.S. dollars, to buy real things as stockpiles, A, as investments, and B, as strategic stockpiles. I don't know if they're doing it or not, but apparently that's what they're doing. And as I say, it's a smart thing to do. They have to buy cotton. They have to buy nickel. They don't have the stuff. They don't produce it themselves, enough of it themselves. So it makes a lot of sense that I would get rid of dollars to buy real things. Looks like they are too.
Mm-hmm. Well, when you talk about real things, there were headlines out today reported in one of the financial newspapers saying that Chinese regulators had ordered Chinese banks to ensure volumes of new loans, but to channel those into the quote-unquote real economy, to keep those loans out from real estate and away from the equity markets. When you hear something like that, what does that signal to you with your knowledge of China and how that state is directing investment right now?
Well, anecdotally, I hear the same things that apparently you do, that the government did insist that China make loans, that the banks make loans. They flooded the economy with money. This the same thing happened in America. It's not the Chinese only. The Americans have done an even bigger job of flooding the economy with money. But the Chinese said you have to make the loans. I'm told that some of it's gone into the stock market, some of it's gone into real estate. I have no way of knowing, but I suspect it's happening. Now, of course, the Chinese are saying, hey, wait a minute, guys, let's go to real businesses and lend this money. But I just read the same. I watch Bloomberg just like you.
Well, we appreciate you watching us. I do want to ask you, though, I mean, knowing what you know, do you think that investors in Asia are responding to a true economic rebound here, or is this really just sort of an illusion of a recovery because of the government spending that you've seen in stimulus dollars? This is real?
Many parts of the Chinese economy are, in fact, doing very well. Some parts are actually booming and will boom no matter what. If you're in the water treatment business in China, you're going to make a fortune because it doesn't matter if America and Europe fall off the face of the earth. China has a horrendous water problem. They have horrible pollution. They're spending gigantic amounts of money to clean it up. They're rebuilding the infrastructure, as I discussed a few minutes ago. They're doing everything they can to rebuild agriculture. Mao Zedong ruined Chinese agriculture. They know it. They've got a huge population. So if you were a Chinese farmer, you'd make a fortune in the next 20 years, Margaret, because they're putting so much money and so many incentives. So many parts of the Chinese economy are booming and will continue to boom no matter what happens.
Now, in an address and in an op-ed that the Secretary of State and the Treasury Secretary both jointly published today, there was talk of trying to encourage the Chinese consumer to go out and start to spend. As you know, Chinese consumers are well known for a high savings rate. And the indication in this op-ed is that the reason they save is because consumers in China are simply scared. And Treasury Secretary Geithner and Secretary Clinton saying they need to encourage Chinese consumers to feel more safe in order to be able to go out and spend their dollars. Is it right to be focusing on that?
Mr. Geithner has been dead wrong about everything for the past 15 years. I mean, he's got a lot of audacity to now tell the Chinese how to run their economy. They've done a brilliant job for the past 30 years. The Chinese consumers are consuming more. Go to China, you will see it. But to tell people that they need to spend rather than save, I mean, the reason that the Asian economies have done so well is because they are huge savers and investors. The way you build an economy is you save and invest. Mr. Geithner and Mrs. Clinton apparently want everybody to go out and borrow and spend. That's why we're in trouble. The idea that America is going to solve its problems by more debt when we have a huge debt problem is ludicrous. And now to tell the Chinese that they've got to do it the bad way, I mean, please, you're bad for my nervous system. They're bad for my nervous system.
All right. Well, Jim Rodgers, thank you so much for joining us today live from Singapore. I appreciate it. And thanks for staying up late for us.
Hear more Bloomberg News reports on the Bloomberg Terminal at AV Go, on Bloomberg Television, and on Bloomberg Radio. Copyright Bloomberg LP 2009.